What's up, everybody? Dave Bartosiak here, and I've got another chart of the day for you. This time we're talking about NVIDIA, ticker NVDA. So, a couple of things. Remember, we haven't talked about actually how to use our interactive charts page here on Zacks. So, I mean, we have, but it's just been a while. So, obviously, you put whatever ticker you want, and then in the indicators page, you can pull that up just by hitting backslash. It allows you to use two indicators, on our free version that we have on Zacks.com. So what I like to use is the moving average ribbon, because that'll actually put 4 moving averages on the chart. So you're cheating a little bit, but that's okay. We can cheat the system. And then RSI, relative strength index. So I put these two bad boys on there, and then you can always go and edit them. So this little nut looking like thing over here is the settings. And you come in here, and if you guys have seen one of these before, I'm a big fan of the 50 and the 200, but for whatever reason, I like blue, cubby blue on the 50-day and red on the 200. Okay, now, what's happened? So obviously the trade war, is where things started to go wrong for NVIDIA. Because of all those tariffs. So how's NVIDIA going to make money selling chips to China if we got all these tariffs? So now we see to have this sort of downward trend channel that's developing. So, and again, you don't need to draw lines of the chart to figure out that the stock was going down. You just got to look and see where it was before and where it is now. But a couple of key elements to this, just the 200-day moving average. Notice that the 50-day has crossed below it. That, my friends, is the death cross, the dreaded death cross. Now, I will say, a lot of the time, the death cross is the last guy to join the bearish party. Not all the time. Sometimes it is. Sometimes it works. Looking back here in 2022, it worked. After you got that death cross, NVIDIA shares continue to go lower from about 23. That's right. 23 down to 11. So it got cut in half from there. Keep that in perspective. We're talking about the stock up at 104. Granted, these are split adjusted numbers. Okay. So now we are underneath this 200-day, figuring out where are we going to bounce. Now you have this low on April 7th, 86.62. Now things started to turn around here for NVIDIA and for the broad market 2 days after that. That's when we got that giant rally, 10% in the S&P. All that good stuff. NVIDIA up 18% on April 9th. But since then, we've been trading in that range. So near the top of it, which is a good thing, but still every single day has been within the range. Of course, it's a 10% range, right? We're starting to challenge the top of that. It looked like the market was normalizing. Everything was going to be okay. And then bad news. NVIDIA has been informed by the U.S. government that they basically are not going to be allowed to sell their H20 chips made for China to China without a permit. And NVIDIA estimates that's going to cost them $5.5 billion on earnings in the quarter. Now, it's a $5.5 billion charge they're estimating, but I got to tell you something. That's not the end of it, right? They're just talking about stuff that's already there and that's on the books. They haven't really gone into any forward kind of guidance or anything like that, so it could get worse. So anyways, that's the reason for the negative news. We've already got a really big range here that we can build off in the intermediate term. So we can go ahead and draw our fibs really on this range. So we can go to the bottom here, 86.62 to the top of this bar. And this is where we're going to get into some of these tighter ranges that you'll be able to use intraday. Does it come as a shocker? Now, I'm going to use the exact values here. And again, after you draw your fib, if you double click on the end of this, you can get this little nut again. And 86.62 over there was the low. What was my high over here? 115.10. You can adjust it with the arrows or put it in, and boom, you've got your levels. All right, what do we notice? Right away, today's move coming down just below that, I guess, the 38.2. Down to 104.22. What has the low for the day been today? It's been a 103.80, so it sort of dipped below it. And now we're thinking about what might happen. So should we get a bounce? We're taking out the highs. There's going to be a little bit of resistance at the 23.6. There's going to be a little resistance at the end of this gap, but this likely, if it happens that quickly down at the 38.2, that's something you can look for. Should it break down, next fib target 186, below that 97.50. This would sort of be among the last level before you really ought to think that the low is going to get retested. And then should that low break down, you have extensions off this low down 75 and change. I think based on all the negativity we've seen so far, that's a long way down. Okay. All right. Let's get out of this fib. Let's blow this thing up a little bit bigger and give some perspective. We got an oversold reading in NVIDIA right at that low, which was bought. Last time RSI got oversold like that, below 30, we're talking September of 2022. Historically, that ended up being a pretty good place to buy that dip. Even the first one here. September 22, the stock at 13, mid 13s, got back down again to 12s. Still historically a pretty good time to buy it. I'm going to zoom out a lot here so we can go and see even back June 2019. Again, another time ended up being pretty good, but hindsight is 2020, my friends. So looking forward, what do we got to worry about? Well, we drew those fibs in the intermediate term. We know that gaps like to get filled, so keep that in mind. Market was oversold, okay, on the move higher, which is good. So it's all about that range that we put in before. We could very well bounce within that range and just kind of teeter around. I think as a stock like NVIDIA becomes more mature, just larger, odds of these more sideways patterns increase, versus these like exponential moves. And we've seen these sort of sideways moves before in the stock, where it spent a lot of 2023 sort of bouncing within a range while it decided what it was going to do, while the market was undecided. So I think that's more likely what you're going to see versus a precipitous drop or a big bounce higher. And if you sort of zoom this out here, you kind of see that this level, sort of $90 level, has historically been an area where it's traded at before, it's bounced its head before, before making that break higher. So if I were a betting man, which some say I am, I'd say we get a little bit of sideways action here for everybody. It's not going to be just straight up or straight down. Now that the VIX is coming down too, that kind of lends itself to that a little bit. Overhead resistance, you've got not only the top of that range, but you have the 50-day and so on and so forth. So, all right, folks, there you have it for my chart of the day. If you liked it and you're on Zacks.com, be sure to subscribe to our YouTube channel, but follow the author if you're on Zacks.com. I'll be back with another one of these after the holiday break. Thanks for checking us out, and we will see you all next week.